And if you've invested in Bitcoin, well, yesterday was probably not the day for you. The value of Bitcoin plummeted. At one point, it was selling for under $61,000, and that's now half of its all-time high of more than $126,000, which was reached back in October of last year. Now, this drop comes as tech shares also fell in recent days. Let's bring in CBS News business contributor Javier David. Javier, thank you so much for your time today. Okay, so the crypto market experienced one of its biggest downturns in recent months. Just how significant is that, and why is it happening?
Yeah, look, the Bitcoin and the crypto story overall is just very complicated. It's really not just one thing happening. It's the narrative is really multifaceted. Part of the story is this AI-inspired risk aversion that we're seeing all over that's dominating markets. Another is the Fed chair nominee, and people are wondering if he's going to be hawkish or dovish on inflation. Another influence is the liquidation of a lot of leveraged positions and just plain old profit taking that, after a stellar rally above 100,000 in Bitcoin. But all of that being said, there are a few things that are abundantly clear. Bitcoin's still having a really hard time convincing a broad swath of the investing public that can be trusted, either as a safe haven, an inflation hedge, or an alternative to paper money, which has a lot of problems of its own. So as you said, it's an asset that's fallen about 50% from its record high. It lost 20% this week at the lows. So it's a high risk, high reward asset. It's made a lot of people rich. I mean, can't knock the hustle or whatever Jay-Z said that one time. But the reality of it is you have to stomach a lot of stomach churning volatility and some pretty steep losses whenever crypto shakes out. And these drawdowns happen a lot. They are significant, and they're just not for the faint of heart.
And so based on that, if you've invested in Bitcoin, should you be concerned about this? Or is this one of those things where you just wait it out and see what happens?
You have to wait it out and you see what happens. If you're already invested, it's sort of in for a penny, in for a pound. So after all this time, it's been embraced by a lot of institutions and small investors. So it's not easy to just get out of it right away, but it's a very volatile thing, and it really undermines the attractiveness as an asset or an alternative to fiat money, or even something you want in your portfolio mix. Do you buy this dip and risk kind of trying to catch a falling knife? That's very much the open question right now.
Yeah. Okay, so Javier, big tech companies, they lost more than $1 trillion in market value just this past week. And this looks like investor anxiety. What is causing that anxiety?
Yeah, they're calling it the SaaS apocalypse, the software as a service apocalypse. And what you're seeing is a market that's really struggling to wrap its head around the existential disruption of that AI represents, who's going to get impacted, how much all of this is going to cost, and whether it's going to even pay off in the long run. So investors are in this mode where they're shooting first, they're asking questions later. Anthropic is an AI startup. They're pretty prominent in the AI space. They kind of lit the fuse this week because they released this new tool that upends traditional legal software, and it just spooked everyone. And one Twitter AI user I saw today joked that AI is going after the accountants, and he's not wrong. Software stocks in general are all tumbling because markets suddenly realize that AI can just cannibalize a lot of the functions that comprise the foundation of these companies, names like Salesforce, ServiceNow, Intuit, LegalZoom. The smarter and more effective this technology gets, the bigger the challenge it is for a number of the established services that until now have been kind of seen as relatively future-proof. And this is kind of an extinction level event for them. And given all the money that's spent on AI, they could be right.
And Javier, I want to ask this because there's people who are just selling right now. Where are they putting their money? What's happening?
Well, usually, I mean, the joke is it's going under the mattresses. Everyone moves to cash. They don't know where to go, where to spend, what's trustworthy. There's an impulse, obviously, in times of extreme volatility to move to cash. It feels safer than stocks. It's certainly more liquid, but there are risks to doing it that way because you can miss out when the market rebounds. You never know, as today's movement shows, when the market is kind of oversold, people start coming in and buying, and then all of a sudden you're off to the races again, and then you may have missed out on something that you otherwise would have still been invested in. So everyone tends to go to cash, but that's not necessarily the most advisable strategy.
And I assume the idea when it comes to investing is that you're always investing for the long term. So even if something happens, that shouldn't chase you away or scare you off, right?
Yeah, absolutely. I mean, AI, and I mean, not AI, but crypto, I think convinced a lot of people that they had to turn into sort of day traders, and they're constantly watching the markets, and you have to trade and sort of get ahead of every move. And that's not a good idea because you do sacrifice kind of the long-term vision, and it makes you very jumpy and very reactive. And that's not a good place to be when you're invested for the long term, you always have to see the bigger picture. You can't sort of react to every negative headline and every move down.
Yeah, Javier David, as always, thank you so much for your insight. We appreciate your time today.
Sure, absolutely.